Now adjust the volume control so that the sound can be heard in all parts of the room.
This is the Protect Your Assets podcast.
You get the idea?
It's on the internet.
Make him the cutest that I've ever seen.
Go on.
Give him two lips like
It's like no cheese I've ever tasted.
and tell him that his lonesome
Here's the
nights
Sandman.
are over, Sandman.
Do you want to retire? Are you anxious about money in the markets? Maybe you should retire early. Come along with us as we share 5 ways to help you retire early and avoid worry. Good morning. Happy Mother's Day weekend to all you mothers out there. Welcome to Protect Your Assets. I am David Hollander, your host. It's so great to be with you this beautiful morning. For those of you just joining us for the first time, welcome. People around here, you hear the jingle, they call me the Sandman. That's because I help my listeners keep more of what they work so hard for by answering any question you might have. I've been running a tax, legal, financial firm for over 30 years. Did you know this? According to a recent survey, retirees who work with advisors have more monthly income than those who don't. This was a study recently put out there by Schroders. It said that those who work with an advisor had nearly, get this, twice as much income as those who didn't. So what would you do with all that extra money? Think about it. Retirees with a financial advisor end up with a lot more monthly income than those who don't. The study showed that those who worked with an advisor had a plan that showed their monthly income of $5,810 compared to those who didn't, which was about $3,000 a month. So what would you do with that extra $2,800 a month? Well, if you want to retire early and you don't know where your income's going to come from, the market's been bouncing around, you're wondering, how would you get out of your strategy, start to liquidate things? Well, that's what we do. We help you protect more of your money so you have more to spend. And today I'm going to give you 5 ideas, 5 ways you can retire early and avoid worrying about it. You're only going to find it on this show today, so stick around. Now, let's get started. Markets held up this week as the U.S. reached a trade deal with the U.K., lowering tariffs to about 10%. There's some fine print about that. But anyway, the Dow finished down a little bit, down 0.2%. The S&P was off about 0.5%. NASDAQ off again 0.3%, not much. MSCI International was down a little bit too, about 0.8%. 10-year Treasury, well, that was up a little bit, 4.38%. Oil, nice week, up 4.6%, a little over $60 a barrel now. And bonds off 0.2% for the week. And so it's not about the trade deal anymore. It's about tariff reduction. Let me tell you what I mean by that. The logic is this in the market right now. If there are only 10 to 15% tariffs, then the economy can stomach that, and the chances of a recession or a surge in inflation will go down quite a bit. And since much of the drop in stocks has been driven by stagflation fears, the reduction of that risk, it's a positive. So right now, the U.S. and China are meeting in Geneva, and I don't expect anything magnanimous coming out of those meetings today or tomorrow. But you know what? Any tariff reduction, market likes it. That's a positive overall. And to add to that, the Fed met this past week, and they kept rates unchanged. And my takeaway from listening to the meeting, because I'm not going to bore you with all the language and what it means, but for me, what it means is this. I think there will be 2 cuts this year, and I think it's going to happen in the later part of this year. But what about in the immediacy, the immediate term? Well, look, we see trade tensions start to ease back a little bit. We have the pro-growth policies with regulations and taxes. Don't forget the taxes are going to happen this year, whether you like it or not, because at the end of the year, they're going to expire, and you have to do something. With fixed income, if you're looking at fixed income right now, don't forget I see value right now in the 7 to 10 year space. And so right now we're looking at alternatives. We're looking at things that pay nice interest rates, lock it in, protect your principal. That's really what it's all about right now, because in this environment, you need to be protecting yourself. And if you're not, or you're not thinking about it, well, now's the time to get started on that. All right. Now, how should you be saving your money right now if you're still working, but your intent is to retire early? When I come back, I'm going to share 5 ideas with you where you can start sticking away a lot more cash. Hope it accumulates over time with some strategies we're going to talk about, and then retire early. How does that sound? Well, if you like that, then you're listening to the right place. This is Protect Your Assets. I'm David Hollander, the Sandman, and I'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander. This is Protect Your Assets. People around here, they call me the Sandman. That's because I help you keep more of what you're working so hard for, particularly in these volatile times. If you missed any of today's show, go check out our podcast. Anywhere you get your podcast, you can just type in Protect Your Assets. We have a market segment there and then also the show. So if you want to learn more about long-term care or about taxes or about small cap growth funds, you can just type in Protect Your Assets and the subject you're looking for. If you've just tuned in right now, well, we're talking about the 5 ways to retire early and avoid worry. So how much do you need to save so you can retire early? I get that one all the time. Is there a magic number? How much should you be saving each year so you can retire early as an option? Well, these are great questions. The answer, well, the easy answer that everyone always says, well, save more earlier. Okay. Yeah, that's true. That works. But the average American, get this, saves about 4% of their earnings each year. This is according to a recent study by T. Rowe Price. And 4% just won't do it. So let's talk about some percentages. I recommend, if you can do it, try 10%. Start out with 10% and then ease up to 15% if you can do that. That will help a lot. In fact, again, according to this T. Rowe Price analysis, if you do that, get this, you could accumulate 11 times more income by age 65. Again, it's a great article. You might want to check it out. Then I get some extreme people. There's a few people I've met over the years that come in, and I would call them extreme savers. And let me explain to you what that means, because these people are a little different, but they get it done. And what they do, particularly as they get close to retirement and maybe their kids are out of the house and they don't really need to be spending money on those things that they kind of want, but they don't really need. You know what I mean? I call that the 5 to 10 year gap year. Well, get this. Try this. Think about this, because there's people out there who do it. They save 50 to 70%. You heard me right. 50 to 70% of their income. And they do it in a way where they don't pay taxes on it. So think about that for a minute. If you could take up half of your income and don't pay tax on it, you're going to pay tax on it at some point, yes. But there's ways you can defer it. And if you max that out, and if you do that, well, then you can accumulate a lot more. So how would you do that? Well, your 401k is one great way to do it, of course, because you can max out your 401k. And there are ways to put more into your 401k if you get matching, which is free money. So I always tell people, max that out to the hilt. So you get every dollar of that free money. And then put more in. Because especially if you're over 50, you can put in a lot more than if you're under 50. And right now, when a lot of people are starting to get laid off or in their late 50s, right, 58, 59, 60, a lot of those folks right now are getting laid off. And it's kind of tough to get back into the workforce, isn't it? So if you're in that age range, you're still working, put more away in your 401k and find out how much you can do, because usually you can do more than you think. In some cases, you can put up to $65,000 a year away in that thing with your employer match and all the other things that are available, like backdoor Roth IRA. I've got a YouTube on that. If you haven't seen it, go check it out. Backdoor Roth IRA, David Hollander. I walk you through that whole strategy. It's a great one. What else can you do? Well, there are other tax-favored ways to do this. And if you want to know what those are, you just got to call me, 866-PROTECT. Remember, we do taxes here. We're lawyers. We're financial advisors. We know this stuff. It's what we do every day. 866-PROTECT. So what's the number one mistake that most people make when they save for retirement? Well, that would be this one thing. I see this time to time. I see it like it's a red flag. You don't control your spending. A great way to start to get control over what you spend is looking at the things you don't really need. Like what? Well, the streaming services. How many streaming services do you have? I mean, add that up. There is an app right now that consolidates all that and really figures it out. I don't remember what it is. Do you know what it is, Kevin? Rocket. All right. Check out Rocket. Put in your services. Do you really need all those? And that could add up to thousands of dollars a year. Extra money. That's just money. Are you still paying for cable? Well, I was until Kevin educated me, and now I have YouTube TV. I just streamed, got YouTube TV, and I was saving several $100s a month, which go back into the investment account. And you invest that and compound that over time, thousands of dollars. This could help you save so much more by just looking at these simple little things. All right, what else? How about dining out? Do you go out just because it's easy? You pick stuff up to go? I know that's super simple. DoorDash. Well, just cook at home. Maybe you cook at home once or twice more per week than you're doing right now. And again, save that money. What about all those memberships? Do you need them all? You really don't. And maybe you'll use them more in retirement, right? If you retire early, you go back. Ask for a pause. I'm going to take a pause for a year. Come back. They'll say sure. They're not going to tell you no. Ask. For more substantial savings, these are what my streamers do. You ready? They look at the big expenses. What's your biggest expense here in the Bay? Household expenses. That's right. The average household spends around $70,000 annually on housing. Could you find a more affordable housing option by downsizing now? Get rid of some of that stuff so when you're gone, your kids don't have to deal with it. You're creating a nightmare for them right now. You don't need all that stuff. Next, plan carefully. Early retirement poses some unique financial planning challenges. Well, like what? Your longevity risk. How much do you need again? What's the number? Well, let's look at some rules. Write this one down. You can research some of this stuff after the show. Again, I'm just giving you the outline. The rule of 25. Never heard of that one? This offers a simple answer. First, you estimate your annual retirement expenses, and then you multiply it by 25. For instance, you need $80,000 a year currently. Well, multiply that by 25 and you get $2 million. That's the number. This will allow for a 4% annual withdrawal while you preserve your capital through retirement. Now you're going to say, well, I've heard your show before about the 4% withdrawal rule, and that was based on some old statistics, and Vanguard's got a new paper out that points out that the 4% rule was based on a 30-year horizon. If I retire in my 40s or 50s, I could live another 40 years. Yeah, true. Well, if you read that Vanguard article, then you saw how the authors suggested you could consider what they call a, quote, dynamic spending withdrawal strategy, end quote. I love that. Dynamic. What does that really mean? It means you're going to spend less when the markets are bouncing around if you haven't developed a plan. It's just that simple. You want to improve your chances where you won't have to live a dynamic strategy? Then you better pick up the phone and call me, 808-5627. Another nugget. Here you go. How about the 80% rule? You ever heard of this one? This rule states that you should aim to have enough savings to replace, 80% of your pre-retirement income. This rule assumes you'll have a high level of spending for a few years before settling down to a less expensive lifestyle. Why? Well, you're not commuting anymore, which that's kind of gone out the window, right? We're not all riding BART anymore. Working from home. Are you saving that money? Hope so. What about supporting your adult kids? Maybe they're finally on their own now. They're actually able to pay their bills and they don't really come to you anymore and ask you for that every now and then. Are you saving that money? Well, you could. Anyway, if you don't have those expenses, again, that 80% rule could apply to you. Again, some people that we work with, this rule doesn't work. Why? Because most of my clients are more active in retirement. What do I mean by that? Well, for those clients who are, say, in their 50s and 60s, I find a lot of them are traveling quite a bit. Planning that month in Rome, Thailand, Ireland, South America, you name it. I mean, I'm talking to people every week, and that's what they're doing. They're running off to other places. They're living there for a month to 2 months. And they're active. And that's great. And you know what else? It costs a lot less over there, too. So a lot of people are actually doing better by doing that, believe it or not. You'll want 90 to 100% of your pre-retirement income if you're going to be super active, particularly around the area where you live while you're younger. That's not going to go on forever. A lot of people think that they're going to need it till they live to be 95. No, it's not true. What about taxes? Well, I read a really good article yesterday about this. The tax laws as they exist right now are going to expire at the end of this year. Congress may come together and pass a tax amendment, referendum, new tax laws. We don't know what that looks like yet. So you should be considering right now the taxes as they exist now and possibly higher in the future, and what sort of penalties or early withdrawal charges you might have to pay if you have to live off of some of those accounts before you're age 65. Medicare doesn't kick in until you're 65. So these sort of factors require what I call meticulous planning. What if you're a public sector or government retiree? Well, then you have some other issues to consider. If you were a federal, state, or local government employee, then you have some good news this morning. You can now collect a public pension and full Social Security benefits. You heard me right. Check this out. The Social Security Fairness Act, the SSFA. You're now eligible. You may have already gotten a check. That's what that's about. You may be able to collect retroactive payments, though all of those payments will probably be delayed until December of this year, but you'll still get it. For early retirees with a family, well, then you better get an estate plan together. That is important. Because one thing I can tell you is you're going to be running around, things are going to be going great, and then you know what? Something can happen. All kinds of things. I've seen it. I'm not going to get morbid and scary right now. I don't need to do that, but things happen. Let's just put it that way. And so if you don't have a plan, an estate plan, legal plan done by an attorney, please, then you're sitting on a disaster. And then I'm usually the guy who cleans it up. Had one of those recently. Guy was a great property owner. He had 16 different properties. Had like 22 bank accounts. And then he got the bad news. And the bad news was you got probably about 6 months to live. Well, guess what? As we started getting into this, it turned out to be about a week. And now it's looking like maybe 3 weeks. You know what kind of pressure and stress his family's going through right now just to get everything together? You don't need to do that your last few days of your life, do you? You pick up the phone and call me. 866-PROTECT. The safety net is failing. What is that? Well, remember Social Security and Medicare? It's supposed to run out in 2033 if Congress doesn't do anything about it. Although that sounds dire if you're a beneficiary of one of those programs or both. What does it mean? Oh, you're just going to receive less money. Not zero money, but just less. Long considered the third rail or untouchable entitlement. I think it's unlikely that lawmakers will let the trust fund completely lapse, of course. But to save your Social Security, what might they do? They could raise the full retirement age, meaning you have to work a little longer. Or they could lower benefits depending on your income. That's why you need a plan to figure these things out right now. And so I'm going to get you started this morning with my free retirement checklist. This is something I'm going to email you this morning for free that gives you a simple outline of things you should start thinking about now. Absolutely free. Call this number, 866-PROTECT, to get my guide now. Get those questions answered you've been asking yourself. Call 866-776-8328. That's the number. Call us. We're here live right now. 866-PROTECT right now to get your retirement checklist. Coming up next, it's time for our popular They Say segment, where they say saving in a 401k and cutting your expenditures is all you need to do to boost your retirement. Is that all you can do? Oh, I got some hacks for you coming. Get ready. You're listening to The Sandman on the Protect Your Assets Radio Network. We'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to PYAevents.com and signing up for our next free event. That's PYAevents.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. This is Protect Your Assets. I am David Hollander. They call me the Sandman around here. That's because I help you keep more of what you work hard for so you can sleep well at night. Well, we're talking about the 5 ways to retire early, if you were thinking about that. And so we were talking about saving more and the myths around the 4% rule and thinking about your benefits and taxes and things like that. Just covered government employees. If you missed any of that, you can always go back to my podcast and catch what you missed wherever you get your podcast. Just type in Protect Your Assets. And if you like what you hear, then please tell your friend. I appreciate that. You could also do a listening party. People have been doing that where they do a podcast listening party. I've heard about those. Anyways, now it's time for one of our fan favorite parts of the show. It's our They Say segment, where we debunk common myths, half-truths, and sometimes just bad advice that they say.
Who are they? What do they know that I don't? And what are they saying this week? Here's David Hollander, the Sandman's answer.
All right, so here's one they say. In fact, I just said it. You should save as much as you can in your 401k and cut your expenses. Okay. Is there anything else you can do to save more now. Create more income, right? Okay, well, yes, the answer is yes, you can. This is what some of my other clients and friends have done. These are the hacks, if you will. Increasing their earnings. How do they do that? Well, some of them go to their current employer and they work additional hours. They see if they can do some other things. Another option in the company is that you could ask them for a promotion, maybe transition into another role where there's better pay. Some other creative ways to increase your income? Well, you could start an outside business. One of my clients is very passionate about chocolate. And the two of them started a chocolate business. And that brings in extra income, about $50,000 a year, into their household by, you bet, producing chocolate. I have another client who makes cookies. And you can send those to folks when they open accounts or things like that. So there's all kinds of ways to do what you like, what you enjoy, and create extra income if you get the right coach to show you how to do that. Here's another one that I was talking about with a client yesterday, and it seems more people are doing this, particularly in the Bay Area, particularly in cities where people like to travel. How? Well, they convert either their attic or a basement or another room in their house into an Airbnb weekend getaway. And they literally just wall that thing off, have a separate entrance in there, put it up on Airbnb, make it comfortable, put things in like a coffee maker and things like that. Simple. But if you have parking and easy access and a shower, well, that could be some extra money each and every month, quite a bit actually. And you can just start saving that. Next on our list. Now, this is the one that is a little challenging, but we're going to talk about it. Invest wisely. What do I mean by that? Any retirement's going to be difficult if you aren't staying ahead of inflation. So that means you need to invest that money in the market typically in order to retire early. So we already talked about 401ks. Those are vehicles. I recommend you do a Roth IRA. If you're not doing that right now and you can, add Roth to your strategy and max that one out. What's another one? I talked about this earlier. The HSA. That's essentially like another Roth that you can use, invest in the market, and then have that money later when you might need it for healthcare, which might be one of your biggest expenses later. Once you've maximized those accounts or funded them, you should invest it. And you should be investing in a way that, of course, meets your objectives and your risk tolerance. And that's personal, extremely personal. And that's where we use a tool. I call it the Portfolio MRI. So first, it takes a snapshot of your existing portfolio. And in this person's case, I'm looking at right now, she had a brokerage account, and then an IRA account and a 401k. And so what we were able to do is we took a snapshot of her positions that she has right now. So what our tool will do is it will actually look at each and every position. In this case, she has some stocks and some different growth funds, and we're able to let her know what she's paying for those and what the risk level is on that and what the performance with a 95% historical range looks like over the next 6 months. Best case, worst case. That'll produce a number. In this case, 77 was the number on her brokerage account. Now, when she took our test, she came in at a 45. That's her sleep number. So the goal here was to get her portfolio into a 45 as opposed to a 77. Why? Because sitting at a 77, when we stress tested it, it said that in the next 6 months, she could go down 18%. And she didn't want that because she wants to retire in the next couple months. But on the other hand, she's got to keep that money working for her so it's not just sitting in the bank earning next to nothing, because that's not going to do anything for you. So this is where I call the customization. This is where you need an advisor who uses a tool or a way or a method and has a team of people that can work on this as you work your way through retirement. Otherwise, it's just setting it and forgetting it. That's no way to do it. You need to be active on this stuff. So check out the crew that you're working with and see if they have the resources and people to help. We use stocks, bonds, ETFs, alternatives to develop a custom portfolio for you that can keep pace with your retirement. Keep those dollars coming in each and every month, that income, so you can live the life that you want to live. It's really that simple, even though it's not simple, but it is what we do each and every day. And you may have an advisor. You might be saying, oh, I'm fine. It's not about changing your advisor. It's about becoming more informed. And it always makes sense to be more informed because you don't know what you don't know, right? Better yet, you don't even need to leave the comfort of your home right now. I've created a fun, interactive way to get started on this with our retirement checklist. This is simple. This is something I can email you right now. It's a PDF. You can download it. You can start to look over these questions in about 5 minutes and see if they apply to you. It's absolutely free, but you got to call this number right now. 866-PROTECT. 866-776-8328 to get your copy. Call us right now. We're sitting here ready to talk to you. 866-PROTECT. Coming up next, how can you figure out what you are paying for advice? We'll find out when I come back. I'm going to keep it right here because there's another way to retire early. We'll be right back.
If you missed any of Protect Your Assets with David Hollander, all you have to do is go to pyaradio.com where you can download or listen to our latest shows for free. Just go to pyaradio.com on your computer or mobile device when it's most convenient for you. That's pyaradio.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back to Protect Your Assets. I am David Hollander. People around here call me the Sandman. That's because I help you keep more of what's yours. If you just tuned in, well, we've been talking this morning about the 5 ways you can retire early. And so we covered putting more away in your 401k, HSAs, Roth IRAs, looking at your taxes, looking at your investment strategy, getting your estate plan together, and the number 5th one. So retirement is a major transition. It's made up of many financial as well as life decisions that you need to get right to enjoy the best possible retirement. So last on my list is this: make sure retirement is right for you. When you exit the rat race as swiftly as possible, that's a dream. Many people think about it. However, my experience after doing this for 30 years and working with thousands of people is retirement and retiring early can require a significant sacrifice and a commitment to austerity that you may find challenging, especially when observing friends and family embracing maybe more affluent lifestyles. Beyond the financial hurdles, finding fulfillment and contentment, it's challenging. So ask and answer these questions before you separate. Ready? What will you do to occupy your time each day? Think about that. And maybe do it before you leave. Are your plans in sync with your spouse or partner? This is a big one. Because a lot of times when you separate, you have 20, 30 years more of retirement, and your views may not align. And that could be a problem. So talk through that before you do anything like that. If most of your friends are still working, are you going to be lonely in retirement? Researchers have found that some successful early retirees experience feelings of emptiness and anxiety and find themselves in a constant search for labels to define their identity and purpose. Fortunately, the path to an early retirement isn't irreversible. A lot of my clients have gone back to consulting. So they know a lot of things and they're very good at some things. So even though they've got their retirement and they're doing a lot, like maybe they're working out more, maybe they're doing all the health things they always wanted to do, takes up 3-4 hours of your time each day. Well, maybe another hour or two during the day you're doing something you like. Because maybe you don't fully retire. You unretire a piece of your day, okay? And there's no penalty for that because then you're probably going to save a little more. That's fine. You can still retire right on time if that's you, whenever that is, and hopefully some of these tips today helped. If you'd like to start that journey and talk through some of these things with someone with a lot of experience, then go ahead and you can call me right now, and I'll get you started with my retirement checklist, and then we can follow up if you'd like with a conversation. It's absolutely complimentary. This checklist is filled with all kinds of great ideas that I'd like to share with you so you can get started on your journey to a successful retirement right now. Get a copy by calling this number, 866-PROTECT. The number, 866-776-8328. Call us right now and get this emailed to you. I'd like to wish a happy Mother's Day again to all the moms out there. And give a big thanks to the team this morning for putting together a great show. Executive producer, network manager, Kevin Renfer. And, of course, all my fabulous producers back there, Raph, Dylan, Lucas. Because without my team, I'm just another pretty voice on the radio. You have been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Go out and make the rest of your life the best of your life.
Investment advisory services are offered through Liberty Wealth Management, a registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The strategies mentioned are not suitable for everyone. The information expressed does not consider your specific situation or objectives and may not be appropriate for all investors. Past performance is not indicative of future results. To better understand the risk associated with investing and how it reacts to different market conditions, listeners should always consult with their qualified investment professionals, financial advisors, legal or tax specialists, and conduct their due diligence before making any financial decisions or taking any action. The legal information provided on the air is not intended to substitute for callers hiring their lawyers to advise them about personal legal matters. Investments involve risk and, unless otherwise stated, are not guaranteed. Liberty Group LLC paid for the following program, and the host's views and opinions do not represent those of the station or its ownership. California Life Agent number 048569. Persons engaging the services of one affiliate of Liberty Group LLC companies should be aware that each company is operated separately. You're listening to the Protect Your Assets Radio Network.